Nifty as we speak. Let's talk about Nifty Bank. That's the one that's seen muted gains in today's trading session. It's really flat with a positive bias, so you can't particularly quantify which side of the fence is the Nifty Bank in today's trading session. Let's talk about some of the gainers and losers in trade today. You have IndusInd Bank, Ultratech as well as Grasim that are actually ruling the charts on the Nifty at this juncture. But on the flip side, you have ONGC, Kotak Mahindra Bank as well as Nestle that are declining in trade. One sort of a respite that you can take is the fact that the list of decliners that you have on the Nifty, none of them are declining more than 1% or 1% or so. So if you look at the biggest Nifty loser right now is ONGC, which is seeing declines of about 0.8% as we speak. Let's talk about a list of indices and what they are doing at this juncture. If you look at the sectoral indices, you have a metal index that is actually the top sectoral gainer as we speak. You have FMCG index also that's seeing good strength in trade today, followed by some infra names as well that are seeing good strength. But on the flip side, looking at the losers end, and you have realty index 1.2% downtick coming in only for the realty index, top sectoral loser as we speak. Power index also is declining in trade as well as healthcare sector, and you have the broader markets that are tad bit underperforming the benchmark indices at this point in time. So that's the way how the markets are looking at this point in time. Shrishti, but definitely PSU banks, that's the one that has been making all the news, and that's where all the spotlight is.
Well, yes, absolutely. If we see the rally in mid-tier public sector banks, they have actually outpaced the rally that we have seen in the large cap banks. And not just that, the big question is that is this a time to bet on mid-tier public sector banks, as we are seeing that the public sector banks are in focus. ET Now's managing editor, Mr. Nikunj Dalmia, discusses the risk and reward ratio and the public sector bank's valuation. Let's listen into that, and this is the topic that we have today for our viewers in BNS and Lens. So we'll discuss a lot more in detail, but first, let's look at what Nikunj Dalmia had to say.
The smaller PSU banks and the real tiny toons in that space, they've just gone through the roof. UCO Bank, Central Bank, Bank of Maharashtra. And if I put facts out, you could look at the price to book of Bank of Maharashtra and say, okay, it is cheap, but the price to book of State Bank of India's banking business is also about 2 times. So do you want to buy Bank of Maharashtra at price to book of 2 times, or State Bank of India, Bank of Maharashtra at price to book of 1.4 times, or State Bank of India at the price of book of 2 times? Think about it. I'm very clear that banks are in an uptrend. Banks will outperform, but a large part of the outperformance and the market share gain and the earnings and the lending cycle beneficiary would be large banks, PSU, as well as private banks. B, some of the private banks already, if you look at the NIMs for some of these banks, they are not the best in the industry. C, the CASA and the market share for some of these banks, that's not also best in the industry. So stocks are going higher, and stocks are going higher largely because of a rising tide phenomenon. I always say this, that when the tail starts wagging the dog, you got to be a bit careful. So for investors, in my book, I think it's, if not a red light, it's a yellow light. For traders, that's what we would discuss with Kunal and Naresh again, because this in a sense was the most talked about space for last couple of days. Kunal, just answer one word for me in PSU banks and the 3 names there. Risk reward ratio, favorable or not favorable? We are addressing a trader here who's bothered about today, tomorrow, this week, next week, this month, next month.
I think not at all.
Not at all. Say that again.
Not at all.
The risk reward ratio is not at all favorable for smaller PSU banks.
You're buying a stock which, just to give you a rationale, you're buying a stock which is almost at 100% divergence from their 200-day moving average, which is a huge kind of or the much higher end of you trying to buy when you're trying to initiate a trade, and you're trying to buy the stock when they're at the peak of momentum, RSIs of 85, 95 for many of the stocks on the hourly charts. These are typically not levels where we look to initiate a fresh buy, because the risk reward is less than 1:1, not just 1:1 or less than 1:1. So if you're looking to aim for a 10% upside, then you have to be ready for at least a 15 to 20% downside. And such kind of trades, they generally don't result into. So you may be right, maybe 1 out of 10 times, but the risk reward on a broader basis is not all attractive.
All right, so that is the managing editor of ET Now and ET Now Swadesh, Nikunj Dalmia, with his take coming in on the mid-tier banks. And you also got a part of Kunal's view on the mid-tier banks. Don't worry, we'll have a lot more in-depth chat with Kunal on that mid-cap bank. So with that, let me actually introduce Kunal Bothra as well as Rajesh Agarwal on the show. Very good morning to both of you, Kunal as well as Rajesh. Thank you so much for joining us on ET Now. And you've heard what the editor's take was, Rajesh, as well as what Kunal had to say partly on these mid-cap PSU banking names. And you know, over the last few weeks, we've seen the PSU bank rally just pick up steam, and it is for a minute you need to rub your eyes and see, oh, is it really the rally that we are seeing in PSBs and not the other names or not the banking name as a whole? But now, what should people do? Because we've seen the rally in SBI, we've seen the rally in PNB, or for the matter of fact, Bank of Baroda and Canara Bank. Leaving these aside, now you're seeing the mid-tier banks like UCO Bank, Bank of India, Bank of Maharashtra, Central Bank, all of them seeing spectacular rally. I'm sure it is going to be very, it'll make investors quite greedy to get some quick money. But do you think this is the route to take?
Good morning, Sharif. I heard what Nikunj said, and I totally second his thoughts that the second-run PSU banks are a risky bet. The CASA has not grown, NIMs have not grown that much. The kind of rally we are witnessing in the smaller cap names does not guarantee that kind of rally on purely valuation matters. But we should not forget that in the last 1 year or so, we have seen these PSU banking names giving out good numbers. Some of them have given phenomenal growth. For example, I would say that SBI has given the best quarterly numbers it has ever given, but then that is SBI. What is happening right now is PSU banking stocks are running ahead of private sector peers, and that is because of improvement in asset quality. The corporate loan book has grown up. Operating performance has shown some kind of improvement, and not to forget the latest notification of increasing the maximum tenure of CEO and MD of PSU banks from 5 years to 10 years. This will help PSU bank in the longer term horizon, and the valuation discount between PSU and private sector is taking place. Strong quit QT numbers have been very strong. Return on asset has been best in the last 7 to 8 years. I would say loan growth has been good as private sector banks, and the balance sheet cleanup. Plus, added to that, the number of NCLT cases which are happening, and that is going to help these PSU bank report better numbers, because whenever there is a resolution, these return of NPAs are going to add back. This recovery is going to add back to the numbers directly, and that's going to make a big jump in the bottom line. But having said that, I'm still not comfortable with the smaller names like Bank of Maharashtra or the others which are running up. Those who are already holding might continue to hold, but new buy is not advised at this point of time. If somebody wants to have an exposure in PSU banks, I would still go for SBI, Bank of Baroda, Canara Bank. Despite the kind of run-up they have seen, I think they are at least stable. They might go for some consolidation, but in the longer term, they can get good returns from the current market price also.
So that's the fundamental take coming in on mid-tier public sector banks. And what are the factors that are actually steaming up the rally in all the public sector banking units? But Kunal, coming to you, we did hear your partial take on all of these banking counters. But if we see them on the charts from the likes of UCO Bank, Bank of Maharashtra, they have been volume buzzers in the recent past as well. Just from the trading perspective, do you still find any of these counters which are worth buying or trading?
See, I would believe that many of these PSU banking stocks, and especially the ones which have been high-flying in the last few days, as well as over the last 2 or 3 weeks, they've come back into a point of trading framework for themselves, where initiating a fresh trade becomes absolutely risky. Now we look out for the overbought nature of indicators, etc., for many of the PSU banking names. And when, for example, when you have an RSI of 92 plus for PSU banking stocks, even though these stocks are flying on high momentum, initiating a fresh trade becomes absolutely risky. Now in these kind of scenario, it always makes a lot of sense to wait for a sharper correction into these stocks, assuming if these stocks come back to a 3-day or a 5-day swing low. That's a very good point where one could look to initiate a trade, and that could probably happen if the offset is almost 15% approximately for these banking stocks. So one has to wait out for a point where the risk reward becomes at least better than 1:1. Right now the risk reward is less than 1:1, so initiating a fresh trade at current levels doesn't make good trading sense.
Okay, so that's the consensus view coming in from both the analysts, that after a spectacular rally, it's not a good time to initiate a fresh long in all of these counters. But for this, it's time to slip into a short break, but you get ready, because as we come back, we'll take up your stock queries.
Today, this market is only telling you that if you participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to take the most important question to Rajesh on the fact that what should retail investors do in order to protect their wealth. Rajesh, we did speak about this mid-tier PSU banks just before we hit the break, but now what should retail investors do, and what sort of precautions should they take to actually protect the wealth that they've already created in this past few weeks in the rally that we've seen in the markets?
Shail, one thing I have realized in my career when interacting with a lot of investors as a whole is that they don't know their company. I would say first, the way there is know your customer KYC, now it has to be know your company. I have met one investor some time back and he said, okay, I want to invest in Rolex ring. So I said, what's the company about? And he said that it's something to do about Rolex watches. So that's the way things are moving about. So understand the company, know what the company is doing, understand the business model of the company, whether you are a new or a seasoned investor, because you must ensure that you clearly understand the business model of the companies or the business they are into before you invest your hard-earned money, because businesses with sound models and stable growth strategies and clear projections are normally expected to become financially stronger in the longer run, and ensure you don't invest your money in equities of companies whose business model you don't understand, or you don't know what the company is doing, what the company is about. So you first ensure that you do your research about the company, what the products they are doing, in what industry they are performing, and whether they have a sound business models or not before investing your hard-earned money.
All right, so that's the view coming in on from Rajesh on what should retail investors do in this particular market scenario. But with that, let's kickstart with the most important aspect of the show, and that is taking your queries. Remember, viewers, we are live on YouTube, Facebook, as well as on Twitter. We are also, you can access or you can write into us on the WhatsApp number that's flashing on the top of your screen. do mention your name, the stock that you're asking your query on, the time horizon that you're looking to invest in a particular counter. If you've already invested, do mention the quantity and also the average buying price of the particular stock. In that way, our experts will be able to give you a much more better and a sound advice as always. But let's get going with the query segment then. And the first one that I have is coming in from Devi Das. And Devi Das is holding Campus Footwear since allotment at a price of around 292 rupees per share. Would like to know your views on the stock, ready to hold for the next 5 years. No doubt that she's directed this query to Kunal, but since it's a long-term view and since Campus Activewear is a fairly recently listed counter, I'll take this question to Rajesh. Rajesh, what's your view on Campus Activewear? Do you think it's the best bet to stay invested for the next 5 years in the footwear segment?
See, no doubt it's a good company, growing very well. Whole lot of retail stores. They are coming out with new designs and new launches. But the fact remains that it's trading at a very high valuation. PE of almost 80 to 100, I think it's on a very higher side. For a new investment, one should wait for some correction. Otherwise, in the footwear segment, there are better names. The best one would, of course, be Bata or Liberty Shoes.
Okay, so that's the take coming in on Campus Activewear. But moving on, the next query is from SK Saran. He's from Bangalore and he wants to know from Kunal at what price one can enter Axis Bank. And for this particular counter, Kunal, in the past 6 months, Axis Bank gave a run-up of over 25%. What's your view coming in? What are the targets that you should be suggesting?
See, I would be bullish on Axis Bank, but it's just that the last 1 month, particularly in fact the entire month of November, the stock has been mired with a lot of news flows in terms of selling of stake, etc. for the stock, and that's kept the stock a bit more heavy in terms of the price trends. I would believe that in such a kind of a scenario, it makes sense to buy the stock when the momentum comes back again. So that could probably happen if Axis Bank breaks past about the 900 mark. So you'll have to wait out for maybe another couple of weeks or maybe at the start of a fresh expiry for the month of December. If that happens, that could be a better level to buy Axis Bank, not at current levels.
All right, talking about banks, it looks like this is the flavor of the day, and Seema has written to us, Kunal, and this one is for you. 400 shares of Canara Bank is what she has purchased at a level of 380 rupees per share, and this purchase that she's made is during 2008. Now she wants to know whether is there any scope for her to recover her investment amount, medium to long-term investment targets that she can expect in Canara Bank. Kunal?
Well, after such a kind of a strong move for Canara Bank, I think it makes a lot of sense to hold on to the stock. Now, what you should ideally do in this scenario as well is you should look out for at least a 10% correction as a very good opportunity to try and average. So your cost price is 380. Ideally, you should be, and the current price is, I think, around 320 approximately for Canara Bank. So if the stock corrects to 285 to 90, that's the first starting point where you can look to average, and the second point of average would be closer to 270. So keep these 2 points, in mind. In case if the stock corrects and comes closer to these averaging opportunities, you have to try and take advantage of that, and I would suggest to hold on to it from a longer-term view as well.
Okay. But moving on, the next question is from Mr. Kuldeep Singh. He says that he has JP Chemicals and the share quantity is 3,790 and he's holding this counter since inception, and over the years it got adjusted on the back of rights, bonus as well as splits. And Rajesh, let me take it up from you, because he says that shall he hold or sell or switch to some other stock after this spectacular return? I don't know the price of the IPO, but assuming that it is already 100 bagger for this particular investor.
See, I don't find any reason to believe that why one should try to switch or sell out at this point of time when one is sitting at this such comfortable level of investment. Carry on with your investment. The numbers have been reasonable, I would say. The European business are doing well in the US market. The Russian market is doing well. So I think one should carry on with JP Chemicals.
Next question is coming in from Nino, and Nino's question is really short, Rajesh, but I'm very sure that it's one of the most tricky questions that is coming your way. And what Nino wants to know is which one would be your pick in the small cap for doing SIP for the next 5 years?
See, SIP for 5 years, I would suggest go for a large cap Nifty names. But still, if you want for a small cap name, I would say BSE, IRCTC. These are good companies with good business model, good earning prospects going forward, can give you good returns. But again, I would like to reiterate that if you are doing a SIP, you should go for large cap or leader names like Infosys, Reliance, Larsen, HDFC Bank, or the same.
Okay, the next question is from Zaid Zada. He wants to know and have an opinion on Nykaa and Paytm. And Rajesh, let me take up the query from you, because in today's trading session, we saw Paytm hitting yet again an all-time low, and for Nykaa also, post the block deal, and the company has been in news for so many other reasons. Zaid wants to know, should he buy or wait, because he's still looking for a buy opportunity. What's your advice?
See, buying at this point of time is not advised on any of these new age companies, the unicorns of the, I would say, because end of the day, almost all of them, with an exception of Nykaa, are reporting losses. And there is no near-term visibility that they are going to report bottom line into black. Secondly, acquiring customers are a great deal of competition is there, because acquiring them is a headache and retaining them is another issue with them, because customer loyalty is zero. So I would say if somebody is looking for a long-term horizon with good amount of risk appetite, the only stock which qualifies is Nykaa, because one, it's running into profits, although the profits are very meager, but still the bottom line is in black. They have 80 stores in 40 cities. They have acquired some good names. They are moving into salon business, apparel business, although it's not giving good returns, but still they have a diversified portfolio. I would again like to reiterate that for a longer term horizon with a high risk profile only, Nykaa is advised. Otherwise, I would say avoid these kind of companies at this point of time.
All right, so that's the take coming in from Rajesh. In-depth actually analysis coming in on Paytm as well as Nykaa, and what should you do in such kind of companies given the fact what is happening to Paytm in today's trading session, 52-week low nearing their all-time low levels as well. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. But stay tuned, viewers, we will be coming back and take all of your queries, so don't go anywhere.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems
Welcome back to Buy Now, Sell Now, and a lot of viewers are getting connected with us on YouTube. So let me take up a few queries from there. Rajesh, the next question is from Vivek, and he says that he's holding 1,200 shares of Petronet LNG at a price of 229. He wants to know whether he should stay invested in this particular counter from a medium to long-term perspective, or should he take an exit at this point in time?
For longer term horizon, yes, one could carry on with the stock. The numbers have been good. With the transportation of LNG gases and all, I think the numbers are going to improve in the near future. But I don't find any reason to believe there would be any extraordinary return in the short term. For a longer term to a medium to longer term horizon, it can be held with a target of maybe 240 to 50 levels in the next 12 to 18 months.
All right, let me take the next query then. This one is coming in from one of our viewers who's not mentioned her name, but she's asking about Nykaa, which we've already spoken about a short while ago. Let me take this one coming in from Rohan then, and he's writing to us from Navi Mumbai. And Rohan has a query on Indiabulls Housing Finance. 271 is the price, 63 shares. What should Rohan do, Kunal? Hold or sell?
I would suggest to sell or exit the stock. I think it's a big underperformer. It's not performed in any of the market trend, at least in the last 2 years, whether it's a huge rally or a pickup from the 2020 lows, or even in the corrective phase, the stock has corrected or underperformed in the correction as well. So I believe it makes a lot of sense to exit the stock.
Okay, the next query is from Raghu. He's holding HEG at a purchase price of 134, and the quantity is quite large, Rajesh. It's 1,600 shares for him, and he's currently having a good amount of loss. What's your suggestion on HEG?
HEG, you said?
Yeah. Yes, HEG.
Okay. One should continue to hold, and if somebody's funds allowed, one can even add either to HEG or Graphite. Both are doing very well. Recently, GrafTech, which is one of the largest manufacturers in the world, a US company, has said that going forward, the demand for graphite electrodes, which is used in electric arc furnace route of steel making, is going to be very high. Secondly, crude prices have gone down. So this is going to help both these companies in going for a better margin, because their raw material needle coke is directly related to crude prices. And with export duty being removed from steel products, I think steel is going to give better numbers from the March quarter or so. So I think both these companies qualify for an investment. For HEG, yes, you can hold. And if your funds allow, you can even add.
All right, the next one is coming from Soumitra, and this one is on Thyrocare. Not just Soumitra is asking on Thyrocare, we also have Basavaraja who's asking on Thyrocare. What he's asking is whether he can accumulate Thyrocare for the far long term, is what this one is from Basavaraja. And Soumitra has a little longish question. Is the fact that he's saying that, let me read it as is actually, Rajesh. He's saying the view on Thyrocare, touted as a game changer post being acquired by Farmeasy, has been a laggard in performance, in financials and share price since then. So he wants a view on the same. Also, since the buyback happened at 3,400 to 4,400 rupees per share, don't the PE investors question such decision even if they have lost out significantly? We just want a view on the second part of the question. But Thyrocare, what's your view on this particular counter? What do you think is actually pushing the stock lower, given the fact that it had such a big deal come in?
See, competition. This is the only word I would say which is killing all these diagnostic companies, be it Thyrocare, be it Dr. Parlab, be it Metropolis. Everybody is feeling the heat of competition, because if you see Tata 1mg or others are advertising their charges, which are almost 90%, 80%, 90% lower than what these companies used to charge pre this Tata 1mg and others coming into the fray. The second one is when COVID time was there, their testings was very high and they got good numbers. But going forward, I think these companies are going to feel the hit on because of margin pressures, because of competition. The only company which I think at this point of time qualifies for an investment is Metropolis, which is better when you compare to the peer sets. It has acquired a Bangalore-based company that is going to add to the numbers. So I would say it's better to avoid the sector at this point of time. If somebody wants to invest, Metropolis is the only one.
Okay, but moving on to the next query, and Kunal, this question is from you, coming in from Mr. Anish. He wants to know, is this a right time to go long in Kotak Bank futures? And he has a question along with this. He says that since FIIs are in a selling mode, is this a wise decision to hold in the same in going forward in December series? What's your advice?
So I would suggest that to wait out for Kotak Bank. So, it always makes a lot of sense that you are trading into futures or the F&O segment when the stock is riding on high momentum. Now, the only concern with Kotak Bank is the flip-flop price action the stock has whenever it comes closer to the 2000 mark. So, I think almost a couple of weeks back, I had a buy on Kotak Bank around the 1900 mark, but closer to 1960, 1970 is where I had booked out the longs for Kotak Bank. Now, that generally was an indication that let us wait out for the confirmation of the breakout above the 2000 levels. And from those 1965 odd levels, the stock has corrected back towards 1930 mark. So that's the concern with a stock like Kotak Bank. If you buy at the higher end of the price trends where the breakouts have not confirmed, you would be left out, in that waiting game for Kotak Bank. So it makes sense to buy the stock either at major support points or at a breakout point. So I think maybe closer to 1900 mark would be a better level to buy Kotak Bank, or about the 2000 level breakout confirmation is where you can look to buy.
All right, let me take the next one. This one is from Ankit, and Ankit is actually writing to us from Singapore, and he's saying he's invested 1,500 shares in Narayana Hrudayalaya at a price of around 746 rupees per share. Rajesh, he wants your view on this particular counter. He is looking to hold this one for the longer term. Do you think it's a wise decision?
Yes, one can hold Narayana Hrudayalaya, Apollo Hospital or the likes for a longer term horizon, because the numbers have been good. Post-COVID, people are more concerned about their health and going for Mediclaim and all that's going to help this corporate hospitals, I would say. And the third most important point is medical tourism has been on a rise post-COVID. We have seen a lot of medical tourists coming from nearby countries like Bangladesh and all. They are going to add to these numbers. At 750 odd levels, I think Narendra is a good buy at this point of time, and somebody holding can continue to hold.
Okay, the next question is coming from Pranav and Rajesh. Let me take up this query from you. He says that he's holding 1,000 shares of Tata Consumers as well as 1,500 shares of Indian Hotels. He hasn't shared his buying price, but he wants to partially convert it to either Tata Power, BEL or GAIL. So these are the three options he is looking to switch. Will that be right bet for him?
No, I think you should stick to both of them holdings which you have, Tata Consumer and Indian Hotels. Both are going to do well in the near future. Tata Consumer is not doing anything from the last 1 year or so because of the merger announced by Tata Coffee, and that is the reason we have seen many companies where there is big corporate action announced, they go into a long consolidation phase. But once that is over, it's going to do well because of its kind of product portfolio it has, the kind of reach it has. So Tata Consumer is a hold, and as far as Indian Hotel is concerned, with the kind of average room rent going up, paucity of inventory, no new rooms being added in the hotel industry as such, and we have seen revenge travel going up by anything. So even after the kind of run up, Indian Hotels have got a capacity to move up to 370, 380 odd levels. Hold to both.
Go to the next query. Let me just quickly revise your view, Kunal, on Axis Bank and Canara Bank. We spoke, these are the first two stocks, among the first two stocks we spoke about. Vijay Lakshmi wants to know whether it's a good time to enter these counters.
Well, as I said, Canara Bank, you can look to enter at current levels, but then have a strategy of buy on dips at 10%. For Axis Bank, I suggested to buy the stock at a confirmation of a breakout above the 900 mark.
Thank you for that. And let me take the next one. Then that one also is for you. Humaira Sheikh, Vedanta Hindalco, good shares to hold for now. And will it give good returns in a period of 2 months?
So I think 2 months is a very short time frame given the kind of volatility for these stocks. But then I think I've voiced my opinion many a times for Hindalco, where assuming if the stock comes closer to that 405 odd mark, that's a very good level to buy the stock. So I think the opportunity was seen almost a couple of weeks back for Hindalco, where the stock took time and again support at the 400 level. So I think closer to 405 mark could be a much better level to buy Hindalco if I have to choose one from the two.
Okay, the next query coming in from M. Sampata. He is holding 100 shares of Aurobindo Pharma, and it's been 1 year for him holding these shares. And Rajesh, this stock has not been in news for many positive reasons. Do you expect some recovery coming in from this counter?
See, this stock has been a rank underperformer. As you said, it's not doing anything from the last so many quarters. I would say the numbers have been bad. Recently, there were news of some officials being caught because of some reasons I don't better known. So it's better to avoid this stock at this point of time. If somebody is holding any upside, should be taken as an opportunity to exit. Better names into pharma, I would say Ipca, Lupin in the mid-cap space, or a Dr. Reddy, or a Cipla on a large-cap names would be better to switch to.
Okay, so that's the day coming in on Aurobindo Pharma. But with this, it's time to slip into a short break, but don't go anywhere. We'll be right back.
Like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And let me continue with the queries then. And this one is coming in from Satya. And Satya has a query for you, Kunal. And I'm sure Satya has his fingers crossed also because he's hoping that you will not give the answer that he doesn't want to hear. He's saying that he's bought Zensar Tech at a price of around 213 rupees per share. Short to medium term is the view that he wants. What should he do with his holding?
Well, I'll suggest a hold as of now for Zensar Tech. I think the support for the stock is closer to 205 mark. So if you're looking at a very short-term kind of a trade, then keep 205 as a stop loss and look out for maybe 220, 222 as a potential target for Zensar.
Okay, the next query coming in from Vijay. He's holding 14,000 shares of Yes Bank at a price of 62. Obviously a huge loss for him, but he's planning to hold it for the next 10 years. Wanted to get his query answered from Kunal, but Rajesh, because it's 10-year long time horizon, what's your view coming in on that?
See, first, his buy price is 62 and the current market price, if I'm not wrong, is 15-16 odd rupees. So there's no point getting out at this point of time. You have already suffered huge losses. Second, the bank is giving good numbers. I would say improved numbers in the last 2-3 quarters, which we have seen. The numbers have been improving. So I don't know whether in 10 years he will be able to recover his buy price or not, but still the numbers have been improving, and at this point of time it's a hold. You can continue holding to the stock, keep a watch on quarterly numbers. Every quarter they are there. So on the basis of that, one can take a call whether to continue or not. But at this point of time, purely on numbers basis, the numbers have been improving and one can hold.
Next one is coming in from Mayank and Kunal. Mayank has been writing to us almost every day on this particular counter. Let me take it to you then. He's holding about 10,000 shares of Exchanging Solution at a price of around 77 rupees per share. There is some sort of a supporting news flow which makes him believe that the downside is looking limited for Exchanging Solutions. One, do you concur with that view? And also, should he add some more of this particular stock for a period of about 2 years?
Well, I'm not sure of the news flow. I don't track the stock very often, but then just looking at the charts, plain vanilla, I believe it's an okay chart to hold on to it. Now, the positive aspect about the charts for Exchanging Solutions is that the volumes in the last 1 to 2 years has gone into a very strong, kind of a trajectory as compared to the previous years before 2019-20 for the stock price, which means that there is a fresh set of participation for Exchanging Solutions. Now, in that aspect, the stock has also recovered from 30 levels to 140, and from 140 it's come back towards 70 to 75 where the stock is currently trading. So it's a good stock. You can continue to hold on, but the bigger stop loss or a support for the stock would be around this 58 mark, which was the previous, I think 2022 low for the stock. If it breaks below this level, then it could complete a bearish head and shoulder pattern. So I would suggest to hold on, but keep 58 as a stop loss.
All right, with that, let's kickstart with the rapid fire then. And the first query that I have is coming in from Vijaya Lakshmi. Wants to know about, Vijaya Lakshmi wants to know a good time to accumulate BEL and Deepak Nitrite. Either one of them. What's your take on this one, Kunal?
I would suggest to accumulate both of them at current levels as well as on a 5% to 7% dip.
Okay, the next query coming in from Salim. He is holding two shares of Adani Group, Rajesh. One is Adani Power and the other one is Adani Wilmar. A minor loss coming in on both of these counters. Should he continue to hold on or sell at these levels?
Both are add from my side. One can take a dip as buying opportunity.
Vimla George wants to know Polycab or KEI Industries, which one is the better one to invest in? Kunal?
I would suggest both of them are good enough. If you can distribute between both of them 50%, that will be great. But if you have to pick and choose one, then I think Polycab at current levels looks attractive.
Okay, Mamta wants to know it from Kunal that she has bought Trident at a price of 53, but the current market price is 34. Quantity is 1100. Continue to hold on or sell?
Well, I would suggest to hold on to the stock even at current levels.
Jay Krishnan wants to know safe entry price for tube investments for medium term, Kunal.
Well, I think maybe a 720, 700 could be a much better price for the stock. That will make the stock come back towards a 2-day or a 3-day low.
Rajesh, next question from Ramesh. He is holding 15,000 shares of Network 18 at a price of 74. Suggest to hold on or not?
Hold. It's a hold. The price has corrected, but it's likely to move up.
All right, Manish Raju wants to know 400 shares of Rama Steel, 134 rupees. Do you recommend hold for a few more months or book profits or add some more, Kunal?
I would suggest to book out profits over here.
Okay, the next question coming in from Mr. Mahesh, from Mr. Sandeep. He wants to know whether he wants to go for a stock like BPCL at these levels. Rajesh, what's your take coming in on this?
Only if you have a very long-term view, you can go long on this.
Okay, lastly, Indumati wants to know can initiate fresh buying in Affle India for the long term, Kunal?
Well, yes, I think at current levels, 1250 approximately, it's a good level to buy Affle.
Okay, but with this, we are completely out of time in this edition of Buy Now, Sell Now. Thank you so much, Kunal, as well as Rajesh, for joining us today on ET Now and helping with our viewers on their stock queries. It's a good buy from me and Cheryl and the whole team who put this show together. But don't go anywhere. Markets at noon coming up next.
आग को फैलने से रोकना मुश्किल
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy.
D-State snaps the 3-day losing streak, but benchmark remains largely flat with Nifty holding near 18,200 level. Broader markets mirroring the move so far. Real estate, energy among the top losers.
Cautionary note from Goldman Sachs. The strategists at the firm believe that the bear market is not over yet. The brokerage said